All right, the TSP funds is made up. The TSP is made up of 5 individual funds and then the life cycle funds. I'm not going to focus much on the life cycle funds because the life cycle funds are just a mixture of the 5 individual funds. Now, so for the 5 individual funds, you have what's called the G fund. The G fund is your safe fund, right? And if you look at tsp.gov and you see cash in your on your investment mix, that's the G fund because the G fund is government bonds. Now, you're not going to lose much money with the G fund. You're not going to lose any money with the G fund, but you're also not going to gain much money. So with the G fund, you just got to be careful because inflation can kind of crush the G fund and then you lose buying power and things like that, right? Then you have the F fund. The F fund is made up of corporate bonds. The F fund used to be just as secure as the G fund, but in recent years, we've seen losses in the G fund. In the F fund. So you got to be careful with that one. And then you have what's called the stock accounts, and that's the S fund, the C fund, and the I fund. The I fund is international stocks. It's just companies that are not American companies. Period. Right? Very volatile though. You got to look at it. There could be some good things, there could be some bad, but if you look at the last 10 years, the returns haven't been the best. But again, it's companies that are not American-based companies. That's the international fund. Then you have the C fund. The C fund is made up of the S&P 500. It's a S&P 500 index fund. Companies like Apple, Microsoft, Amazon, Meta, Facebook, Tesla, companies like that are what's in the C fund as far as that index fund. Then you have the S fund. The S fund is small cap stocks, right? So these are companies that are not in the S&P 500, a bit smaller, but still actual companies, right? Or the index of those small cap companies, right? So again, when it comes to index funds, index means you're tracking the index that measures all of these companies together. So you have some mitigation of risk there. But the S fund is it's investing in a small cap fund index fund, a small cap index fund, right? And so the C and the S are typically your best funds. But again, do your own research, look at it. The numbers are pretty clear on tsp.gov. Go to individual funds and you'll see those 5 funds. And when it comes to the life cycle funds, the further you are from retirement, the further the date is from retirement. I'm sorry, on the life cycle funds, the more you're going to have stock investments. The closer you are to retirement, the more you're going to have the G and the F fund investments, just because they're lowering your risk the closer you get to retirement. And that's how the TSP funds are made up.